Alright, welcome back to episode 3 of this series, Higher Time Frame Companies. So, on today's video, I'll be going to cover both higher time frame before lower time frame, which is the topic number 3, and key levels, which is topic number 4. So, I'll be going to combining those two topics in this particular video. So, with that said, let's dive into today's video. So, as we all know, higher time frame before lower time frame is simply referring to you as the trader to stack your probabilities on the higher time frame. Like stack your probabilities on the higher time frame before going to the lower time frame to look for what a trade a trade idea or a trade setup, which is topic number 3 here, and topic number 4, which is key level. So like I said, you need to have a clear direction on the higher time frame. Now, once you've identified that direction on the higher time frame, then you can now go to the lower time frame and wait for certain criteria to be met on the lower time frame, so you can trade along with the higher time frame with buyers. So, for example, if we look at this area here, let's bar replay based on hand size. So, if we take price back here. If we take price back here, we can see that on the higher time frame, price is what? Bullish. Price is bullish. Now the narrative is what? We are rejecting the lows, the old lows. You can see this rejection of the previous 3 months low, rejection of old lows, and we are breaking and closing above the old highs. So before we close above this high, we price rejected the lows twice before we close above the high. So this is telling you that we are bullish. We are rejecting the old lows and breaking and closing above the old highs. So if you have this bullish narrative from the 3 month chart, built from the 3 month chart, now you know that on the lower time frame, the retracement or the correction back into this low, this swing low to this new high that is created here, you know that the retracements on the lower time frame, which is a full-blown trend, is just retracing to do what? Fill up imbalances and take liquidities below old lows. Below this candle low is old low, below this low is old low. So when we get to discounts of this range low, range high, then you can now start looking for buyers to continue this bullish uptrend, this bullish buyers and bullish trend you're seeing on the 3 month chart. So if we go to the monthly chart, and if we go to the monthly chart, you'll see that okay, we had a low here, created a high, created another low before broke and closed above these highs. So before that, after that, what you're looking for is price to retrace back into this uptrend that you're seeing on the monthly chart. So all these things you're doing on the higher time frame, you're just trying to build a case study as to why you're going to be bullish or as to why you're going to be bearish. So for this example, you can see based on hindsight, price was bullish on the monthly, and we're expecting retracement to discounts before pushing to the upside. So now in this expansion upward now on the monthly time frame, this is where you now look for your key levels. This is where you now look for your what? Key levels. So key levels that you use are what? Old highs and old lows. So now those old highs and old lows, I'm looking for a turtle soup, like a fake move below them or a true breakout like this. So confirmation is one close above the highs, or multiple closes above the highs, or a rejection below the lows like this, and a close above the candle that took the low. So those are my confirmations at old highs and old lows. So like I said, key levels I use are what? Old lows and old highs. Then also is fair value gaps a after an old low or old high has been swept, like this low that is swept. If you go to the lower time frame, you see fair value gap that led price to push all the way to the highs. So if we go to the weekly, let me bring back those annotations. Okay, so if we go to the weekly time frame here, now we have our bias built from the higher time frame that we are bullish. So on the lower time frame, which is weekly down to daily and 4 hours, we are expecting what retracement towards key levels at what discount. So if we use our tool to mark this daily range between premium and discount, you can see that this is the equilibrium price point, and below we have lows that price is going towards attack if it starts retracing. So let's play price forward. Let's play it gradually on 5x. So you can now see that the retracement is kicking in, and once we get to the discounts here, which is below the 50% as you're seeing price, so now you can now look for what key levels. So below this low, here is an important source key level, and let's take away the shape 2 since we're in discount. Below that low is what below that low is key level, and at these lows as well is key level. So we can be looking to buy from these lows after they reject them to the upside. So a rejection of this low and a close above the candle that rejects the low is what is going to give you the confirmation that price is going to be turning bullish anytime soon. So let's see. And we are at the lows, and you can see how this thick down close candle stabbed into this low, and the next candle was a small range coming to the rejection block of these lows. I think the last close here, the last open or close here is the rejection block before the main lows. So price digged and stabbed into that low, into those rejection block, and we started seeing the rejection. So immediately price closed above this one particular candle here after the liquidation of these lows. Then from that point onward, we want to be looking for higher prices to start attacking these highs that we have here. This one first, then eventually take out these highs. So let's play price a little bit. So that's why you need to build your narrative, your bias as to why you're going to be bullish from the higher time frame first before coming to the lower time frame. Then key levels, like I said, I focus on old highs and lows, and fair value gaps after liquidity have been taken in the marketplace above the old highs and the old lows. Excuse me. So let's play price forward again. So now you can see here, so after the liquidation, price created this weekly fair value gap here, and if you go to the daily time frame, you see more fair value gaps that price will use to continue pushing price upward. So those are the key levels I focus on: highs and lows and fair value gap after liquidations. So you can see price pushing higher and higher and higher. So that is how you build your narrative from the higher time frame down to the lower time frame, and you can see how price used this gap, this fair value gap here, You can see how price used this fair value gap, this overlapping fair value gaps, which is known as the balanced price range. Price came back into it the liquidations, after the liquidation below this old low. Price stabbed into the old low and gave a confirmation that we're bullish by closing above this one particular candle and leaving this balanced price range behind. So price came back, tapped into it before continuing to the upside. So a quick recap on higher time frame before lower time frame and key levels is: on the higher time frame, you want to build your narrative as to why you're going to be bullish or bearish. Having done that, you can then go to the lower time frame to look for what key levels that are likely to push price in that your bullish bias or bullish narrative from the higher time frame. Then you go to the lower time frame, weekly or daily, to frame your trade idea ideas. So you can see how the trend on the daily time frame flipped from rejecting old highs, rejecting old highs, rejecting old highs, and breaking and closing below lows towards now rejecting lows, failure swing here, and breaking and closing above old highs, rejecting lows, breaking and closing above old highs, rejecting lows, breaking and closing above highs. So I hope I was able to cover this topic very well, and I hope this video finds you very well, and I hope you find insights on this video on how to navigate higher time frame before lower time frame and key levels as well. So with that said, thank you for watching to the very end of this video. See you in the next episode. Stay safe, good luck, and good trading.